morning. It's McCollum on Business. I'm Stephen McCollum, and for the next 30 minutes or so, I'm going to get you updated on what's happening around the business world here on this Thursday morning as you're getting ready for work, whether you're watching us live here at Robat TV or even on demand later on the day. Thank you very much for joining us. Of course, look, with the new backdrop, I forgot, don't wear dark colors. We'll see how this goes. Might just be a floating head on your screen here today, but it's all part of the fun out there. Of course, this Iran war situation is still whirling the markets out there, and let's get into that with the Market Watch. Of course, market opens at 7:30 this morning, Phoenix time, which is where we do this show at as well, and everything is down in terms of futures here today. Dow futures are down 268 points. I apologize, 360 points to 48,394 for the futures on the Dow. S&P futures, they're down 33 points to 6837 as of right now. The NASDAQ futures are down 87 points to 25,041 for it. The Russell 2K futures also down 29 points, 2606. And then there's Bitcoin, technically down today, right? 88 points. But most importantly, I guess this is a thing here. 2 days in a row now, it's been over 70,000, 72,617 for Bitcoin here today. And what's happening is, obviously U.S.-Iran conflict causing all this chaos into the market. The bond market going up as well. Treasury yields going up as well as people are moving their money into those markets. Means interest rates rising as well. Oil prices, well, they had a little tick down yesterday morning, went back up overall yesterday as well, and also oil prices are back up here again today as well with everything happening. U.S. West Texas Intermediate Crude Futures, they're up 3% here today. That is trading at $76 a barrel. And the Brent Crude Futures, which is the international benchmark, well, it traded 2% higher here in pre-market as well. That's at $83 per barrel here as of right now. So oil continuing to be up here, which you're going to see at your gas prices as you drive around town as well. It's very noticeable what's happening with those gas stocks with that Iran-U.S. tensions happening right now. Stocks we're paying attention to, well, we're going to look at a stock called Trade Desk out there. For the pre-market alone here, right? Pre-market starts about 4:30 here in Phoenix, 6:30 there on the East Coast is when the pre-market trading happens, and this stock went up 19% immediately today when pre-market opened. A report came out from a company called The Information, and they said that OpenAI had early talks with Trade Desk to sell ads. Remember, OpenAI is now doing ads there on their AI system and their chatbot. Well, Trade Desk is reportedly in that conversation to sell ads. Big jump here for Trade Desk here in pre-market trading, 19% out there. And then there's Broadcom. They're a chip maker. They don't get as much coverage as NVIDIA does and things like that. We have a story coming up more in details on this. But Broadcom is up 6.4% here in pre-market trading. They reported strong results for its first quarter. They had revenue that grew 29% year over year for Broadcom. The company adjusted earnings per share was $2.05. Expectations was only $2.03. Revenue was at $19.31 billion. Revenue was expected to be at $19.18 billion as well. Their revenue guidance for the current quarter, well, it surpassed estimates for Broadcom as well. But again, the big story here, 29% revenue growth there year over year. And like I said, we have a story going into more details about what they are viewing for their future here coming up here, just a few stories away. And then we're going to look at ChargePoint out there as our last stock we're going to look at right now. They had a rough day yesterday toward the end of the day. They ended up 0.46% up as yesterday ended. And then pre-market happened this morning, and they're down about 2% right now on the pre-market. ChargePoint is they provide electric vehicle charging stations is what they do. Well, they said revenue in the first quarter is going to range from $90 to $100 million. Well, the estimate out there was $104.5 million. Missed that estimate. That accounts for the 2% drop here for this EV, electric vehicle charging station company here. As we are waiting for the market open coming up here at 7:30. When we come back later on and look at the market, we're going to look at companies like StubHub. We haven't, we talked about this lawsuit going on with Live Nation right now, who's the parent company of Ticketmaster. Well, what does that mean for StubHub, a competitor there? We'll look at their stock coming up as well. American Eagle and then Burlington stores. We'll go retail as well when we come back and look at stocks here later on in the program. But first, look, the big story obviously is the Iran war out there. We talked yesterday about the Spain, the tariffs. That's still working its way out. Not a lot of new info there other than oil prices up again today here on the markets. So let's focus on some other things out there around the business world besides what that war is doing. And it's simple here. Data centers, we know here in the Valley, our electricity rates are going up because of demand for electricity, and a lot of it's due to the data centers out there. So President Trump yesterday invited technology companies to the White House, and he wants them to commit to developing their own power generation because President Trump is trying to ease tensions over the cost of electricity that is specifically used by data centers. And data centers are there to develop the artificial intelligence and how us as common people out there are paying the price and having higher electricity charges because of the amount of demand that they are doing. So he's calling it the rate payer, protection pledge. It is touted by the president, and it comes as affordability has become a top concern for the American public. And it's all because of the possibility that this whole data center, this AI build out, well, it could lead to higher utility bills. And here in the Valley, especially out in Mesa, Surprise as well. Chandler redirected a data center as well. You're seeing the growth here with announcements in terms of price increases from these energy companies. Trump first announced the pledge during his State of the Union address last month, or what, a couple weeks ago, I guess. But he provided a few details at that time when he did that. Communities across the nation have seen a backlash against data centers. All of this is because of the fears of rising electricity prices, but also pollution, water consumption by these places as well. Opposition to rising power prices was also a key factor in Democratic wins last year in elections. In specific states like Georgia, Virginia, New Jersey, the exit polling said that was a major concern as well. Trump, of course, is trying to deflect public concerns about AI because his administration is fully behind artificial intelligence as well. So he's saying the fast evolving technology is crucial for the U.S. to attract foreign investment, but even maintain its economic and military abilities that we currently have. It is unclear whether the commitments will do anything meaningful in terms of shielding Americans from higher electricity prices. Because we do know electricity prices have climbed 6.3% over the past year. We get that from the Consumer Price Index that comes out from the Labor Department. The president did stress yesterday that he understands that demand for energy will triple by 2035, and most of that demand is going to be because of these data centers, artificial intelligence. So that means the U.S. needs to dramatically increase its construction of power plants. So construction spending on power generation did jump in 2022, but it has basically moved slightly downward over that time because it peaked in October of 23 and started moving down, according to the Census Bureau reporting. Trump has sought to cancel wind power projects, and then he's also elevated coal, and that contributes to climate change as a source of energy. If that's your concern of yours out there, the companies committing to the pledge well includes Google, Microsoft, Meta, the big guys in AI development, Oracle, XAI, OpenAI, and even Amazon, all committing to this pledge yesterday. So, what does the pledge actually mean other than the wording around it? Well, under the terms of the pledge, the companies agree to build and buy new source of power generation for their data centers, and then they cover the cost of those infrastructure upgrades as well. The companies could also sell excess power generation to utilities, that regular people could use as well. Us regular people out there, in addition to negotiating separate rate structures with these public utilities and states. So that basically ensures expenses are not passed on to consumers. We do that here SRP and APS charge higher rates to these data centers, but we still pay the higher rates and they go up in higher amounts because of the demand out there. So that part doesn't help at all, right? The pledge also says that these companies will commit to making backup generation available to prevent blackouts in times of emergencies, and then to hire locally for their data center build outs is up. All part of that pledge out there as well. The you know Having them do their own power generation is actually a huge deal in this. I know Meta's out there in Mesa and have a big one there. They built a big mini power generation plant right there. You see it driving down Ellsworth Road, and you see it where they generate their own power at that point, which in theory keeps it from coming on the grid and driving down our price, driving up our prices as well. We do have a story coming up on SRP and what they're doing for this summer coming up after our break here, so stick tuned on that as well. It's not all bad news, I guess, around the utilities. We'll get you updated on that as well. But also in terms of speaking of chips and AI, NVIDIA has stopped production of chips intended for that Chinese market out there. The reason why? Well, regulatory barriers between Washington and Beijing. Well, they're expecting those barriers to continue, and then a limit what NVIDIA can actually sell to the Chinese market as well. They have NVIDIA has officially reallocated manufacturing capacity at Taiwan Semiconductor Manufacturing. They moved it away from making those H200 chips that they're allowed to sell to China, and they're moving that production there at Taiwan Semiconductor to the next generation Vera Rubin chips out there. Now, the Vera Rubin chips are not available to sell to the Chinese market. So, this suggests that NVIDIA no longer expects significant H200 sales in China anytime soon if they're moving away from making those chips. So if you want to know the difference between the two, to summarize it, H200 is one of NVIDIA's older generation AI processors. It's been positioned as compliant with the U.S. export controls on those advanced chips. The Vera Rubin chips out there were unveiled earlier this year, end of last year timeframe. It's the latest chip architecture. It's designed for more complex AI systems, and it's in strong demand from U.S. tech groups. It's like OpenAI, Google wants to buy these new ones as well. But it is telling when a company shifts and doesn't want to make the other chips at all. It just tells you there's no market to sell them in. So those barriers there, and China doesn't want Chinese companies buying H200 chips from American companies. They'd rather Chinese companies obviously sell them at that point. So interesting development there on the Nvidia side of things. And then there's Morgan Stanley out there. Now, companies that do these types of things always kind of make me shake my head a little bit. They have a bad sales quarter. Like when I worked in the corporate world, the company I work for, I won't out them here. It's like it seemed like every time they had a bad sales quarter, yeah, they had to announce that on the in their investment stuff, and all of a sudden price increase incoming, right, to make up for it. When you have good quarters or good areas and good revenue, and then you want to lay off 3% of your workforce, well, that's what's happening to Morgan Stanley right now as well. Morgan Stanley is one of the world's largest investment banks, but they did announce, well, the Wall Street Journal announced that they're cutting 3% of its workforce. That's about 2,500 employees. It's going to be across all business divisions, but more specifically, the job cuts that are going to be impacted, well, in those three major divisions: investment banking and trading, wealth management and investment management. But if you're a financial trader with Morgan Stanley, you're reportedly going to be safe because the financial advisors are not part of this group. The sector's being laid off as well. Though, as I said, the Wall Street Journal reported this yesterday. But the problem is, right, it's a perceived issue here because the layoffs come after Morgan Stanley. Well, they have 83,000 employees all over the world, but they reported a banner year in 2025. They posted record annual revenue as well. And then they announced these layoffs. Just a bad look when these things happen. So last quarter, Morgan Stanley surpassed profit estimates. That's basically due to the 50% increase in investment banking revenue there as well. And it bodes a question. And Wall Street Journal's reporting did not say this at all, but comes down to, is AI a reason for these layoffs that we're looking at here for Morgan Stanley as well out there. And then we got a follow up here. Remember the Google battle and the Apple battle with third party apps wanting to charge outside of the apps and Google and Apple not allowing it, and then the government got involved and Google was deemed a monopoly because of it. Well, we might have a settlement here actually coming up here. This is between Google and Epic Games here, of course. Google has announced in their filed a briefing with the courts that Google will lower the fees imposed on its Android App Store. They're going to offer a way to rival options to gain its stamp of approval as well, which, of course, they're trying to end this absolute legal battle that has hurt Google in a lot of ways and Alphabet in a lot of ways. And of course, it's led to one of the several rulings condemning Google's tactics as an illegal monopoly by the courts out there. So these were filed, like I said, with the federal court in San Francisco yesterday. But it does it signal an end to this battle? Is what we're looking at here, and I do believe it does because Alphabet has expired all of its legal options at this point. But this case has been going on since August of 2020. That's when Epic Games, who is a video game maker out there, they filed an antitrust case seeking to make it easier for alternative payment options to compete against Google's Play Store system. Google's system at that time charged 15 to 30% commissions on a wide variety of in app transactions. Google's concessions now, well, the reason why, and I said their legal options have expired because 5 months ago, the U.S. Supreme Court refused to hear an appeal of the company's attempt to overturn that federal judge's order requiring an extensive overhaul of the Play Store as well. That's all because of that 2023 trial that the jury declared that Google is specifically an illegal monopoly at that time. So they Google has expired its legal options. They're backed into a legal corner now. Well, so now that's why they're doing this method here to try to solve this. And Google's now prepared to decrease its baseline commissions for subscriptions and those e-commerce transactions. They're going to go to the 10 to 20% range now instead of the 15 to 30. It's also offering an optional 5% payment processing charge that would be applied in addition to the other service fees for apps that do prefer to keep everything within the Play Store. App developers could still choose to rely on another payment processing system besides Google's, and that's why that 5% would be an optional one. Consumers will be able to download apps from alternative stores that go through a certification process as well. So it's not required, but alternative app stores that go through the Google's registration process, well, they're likely to provoke warnings about security risks and things. Obviously, Google will want to scare you from going to those sites as well. The judge overseeing the case, well, he still must approve these proposed registration process as an alternative to a more dramatic shakeup that this judge ordered back in October of 2024. But so Google's trying to get out of this now by making these changes as well from that. Now, Google is already, regardless of the judge's ruling here, if they approves it or not, they're already moving ahead with plans to lower its fees worldwide. Google's having the same problem with the EU, so they're looking to squash that. So they are actually lowering the prices without the judge's ruling on if this is acceptable or not there. But do we have an end here? And Apple, of course, got caught up in this with their Apple Store as well. Maybe an end here finally after the 6 years of lawsuits here between those companies. And we talked earlier about power generation and everything, and I told you we have an SRP story coming up that'll affect us here, those of us with Salt River Project Power and everything here over the summer. Well, before we get to that, we're trying to find new demands for power and generation. The U.S. Nuclear Regulatory Commission, they came out yesterday. They approved its first construction permit for a commercial nuclear reactor in over 8 years. That's going to allow a company that is backed by Bill Gates, by the way. They're going to build a sodium cooled reactor up there in western Wyoming. The company's name is Terra Power. They filed for the permit back in 2024. Construction is now set to begin in just a few weeks here, coming up here. They've already started the rest of the buildings and everything. This is for the actual reactor now. So this is going to be a $4 billion plant. The completion of it is targeted for 2030, according to TerraPower. The uh, Bill Gates is backing this company. He's eyeing nuclear power generation and nuclear power as a power source for these data centers behind artificial intelligence as well. So it's another power option specifically for these data centers. The TerraPower plant is set to be built near a coal-fired plant that is being converted to burn natural gas up there in Wyoming. It's by Kemmerer, is where it's at. That town is about 2,500 people. If I give you a perspective to a big city, I guess it would be just north of Salt Lake City, about 130 miles or so from Salt Lake, is where this is going to go in. TerraPower is seeking to develop a next generation nuclear plant that's going to revolutionize how power is generated. It's going to be a 345 megawatt reactor. It's expected to produce up to 500 megawatts at its peak. That's going to basically be enough energy for about 400,000 homes at its peak level there as well. So, if this works out successfully, we'll probably see more of this coming our way as well. And, we looked at Broadcom earlier as a stock to pay attention to here in pre market, as they were up huge here in pre market earlier. So, some more details here from Broadcom here because they projected its artificial intelligence chip revenue. They said it's going to exceed $100 billion next year. That, of course, is signaling surging demand for custom chips. And this, NVIDIA is the one that dominates this market. There's other ones that do it. But Broadcom is staying and making a name for himself here in this area as well. Broadcom does supply semiconductors and infrastructure software, but they don't basically design entire AI chips itself, kind of like NVIDIA does. Instead, what Broadcom does, it works with their clients, Google, OpenAI, those types of companies. They develop their tensor processing units, those TPUs, and everything. And they do so they work with the companies to design them. So the companies say, we need this. Broadcom designs it, goes to the manufacturers at that point. Broadcom's engineers help translate an early design into the physical layout of the chip that can be fabricated by manufacturers. So that would be like Taiwan Semiconductor, Intel, for instance, as well. Broadcom is expected to deliver 1 gigawatts worth of TPUs for Anthropic, which is that AI startup company, here in 2026. Demand rising to 3 gigawatts in 2027, just for Anthropic by itself. Broadcom aimed to ship OpenAI's first AI chip in 2027 and deliver over 1 gigawatt worth of chips at that time as well. The chip volumes from major customers Broadcom disclosed on their conference call on Wednesday. It shows that they are signing deals approaching the size of those of major AI chip companies. Those would be like NVIDIA, for instance. NVIDIA disclosed 5 gigawatts of sales to OpenAI last week. AMD, they have signed deals of up to about 6 gigawatts with both OpenAI and Meta. So Broadcom getting into that fray as well and expecting and signaling big processes coming their way as well out there. And then for those of you wanting to get on those GLP-1 medications or at least explore those options and they're just out of your price range, well, if you get your insurance through your employers out there, you might have some help on your way coming up here. Because Eli Lilly came out early this morning. They launched a new program designed to help more employers. They want employers to cover these obesity drugs here in the United States. So this is a Eli Lilly is now targeting a major barrier to access to these drugs out there. Lilly and of course Novo Nordisk, their major rival there as well. They've moved to slash cash prices of their popular obesity injections, and those who want to pay entirely out of pocket. We know that with their own cash systems and things to that effect. We've talked about that a lot here at McCollum on Business. But now employer coverage of obesity drugs, it's been uneven due to high costs. So that leaves about roughly half of the people with commercial insurance unable to start treatment or even stay on it because of the affordability. So Eli Lilly here as well. They're going to do list prices for Lilly's weight loss and diabetes treatments. That would be Zepbound, Mounjaro as well. Right now, they cost about $1,000 per month, is what the list price is for these companies to cover it. Nearly one fifth of firms with over 200 workers, that's 43% of 5,000 or more workers as well. They say they cover GLP-1 drugs for weight loss as of October. So we're not talking, we're talking less than half of these companies covering those weight loss drugs out there. So Eli Lilly came out with Employer Connect platform. It gives employers more flexibility in how they cover obesity treatments. They want to aim to broaden employee access to the drugs and low out-of-pocket costs at that time. So they want to limit expenses for the companies, and that way they'll be covered more and used more as well. The program addresses some of the core tensions for employers when considering covering these obesity drugs. That does include transparency around the drug prices, the flexibility and benefits design, like what needs to be covered, what isn't covered for each individual person as well, but also the ability to choose among independent administrators. So Eli Lilly giving some flexibility here coming up here to employers. So through this program, employers can pay a net discounted price of $449 per month. That's for a new multi-dose form of Zepbound across all doses. They also added that the arrangement does not involve rebates, so that the net price gives employers clearer visibility to actually determine whether they can offer the drug or not. That's one thing. When you do rebates, right, you pay the $1,000, you get a rebate on it, convolutes things out there. Instead of relying on traditional benefit designs, employers can use Lilly's platform to connect with more than a dozen different third party program administrators that will help them manage obesity treatment benefits and costs out there. So, Eli Lilly, Novo Nordisk are just continuing to make it easier and easier for these drugs to be covered out there. And look for that possibly coming your way if you're interested in that and your company benefits don't currently cover it. Could be coming your way out there as well. And look, the market opens here in about 2 minutes. When we come back, we'll do a market watch, stocks we're paying attention to, the local stories here as well. And do your Chick fil A fries taste different? A lot of people say they do. We'll tell you probably why here coming up as well. Come on back. It's McCollum on Business. And we're back here, McCollum on Business Thursday edition. Well, we're here and the market's getting ready to open here this morning. It's 7:30 here, Phoenix. Of course, coming up here, 9:30 here on the East Coast as well. So waiting for the market to open in rings. And we'll get into the market and we'll have the pre-market numbers right before the market opens here for you in just a second. Of course, right after this, we roll right into the main event. Me and 17-year NFL veteran Dale Hellestrey get you updated on the sports world with the main event live here at Robat TV, 8 to 10 a.m. On demand after that, both on the production page here that we have on the YouTube side of things. TME Media AZ is where you can find that on YouTube, or just search the main event with Steven or McCollum on Business. It comes right up for you there. Of Of course, you can find everything on demand at Robat TV as well after we're done live here. This show goes up on the YouTube page as well. Free podcast systems for the main event at TME Sports Show, or just search the main event with Steven. It pops right up for you as well on your favorite podcast system. Of course, the pit stop coming to you this week today. We have to do one show this week because of the studio move that's coming today. It'll be up by 2 o'clock here today as well. We'll look back at Coda last week ahead. Phoenix this weekend. I'm looking forward to getting out there. Did a few conversations yesterday with some drivers and things to that effect. A couple Indy drivers as well. Could be a fun weekend out there at Phoenix Raceway. So we'll look ahead to that this weekend as well. So look for the pit stop later on today. On demand here, Robat TV, of course, on the YouTube page as well. Free podcast system. The Pit Stop Talk is where you can find it on the system. So just search the Pit Stop with Steven. Pops right up for you as well. For those of you that rather listen to that out there. The Real Matrix comes out on Fridays, 10 a.m. here at Robat TV, noon on that podcast system at The Real Matrix, or of course on Rumble there for The Real Matrix as well is where you can find their programs. YouTube, a little skittish on some of the subjects there, so we had to move it over to Rumble. All good over there, folks, and let's get into that Market Watch. This is the last pre-market that we're going to see here as the market is ringing open right now. Dow futures, as you can see, way down 352 points right now. The S&P futures down 23. NASDAQ futures down 135. Russell 2K down 28 for their futures as well. Right now, Bitcoin, well, 72,509, staying above 70,000 here this week. So I guess some positive news on that. It's all stocks are having issues because of the Iran-U.S. war here. Oil prices are rising again today. Yields are going up. Bonds, treasuries are going up. People are finding those safe havens here and taking the money out of the market with all the uncertainty. Folks, that's simply what's happening out there right now. Stocks we're paying attention to. We talked about the Live Nation, Ticketmaster. We know those two companies and their monopoly trial going on. Let's look at StubHub here right now as well as our first stock. Obviously a competitor out there. Market has rung open here, so it's going to be interesting to see what StubHub does today. But in pre-market trading, StubHub actually was down 15% here before the market went live. You can see with the gray part on if you're watching us on your screen. Their fourth quarter revenue was $449 million. Well, it missed the estimate out there by a lot. The estimate was $489 million. Their earnings before their company's adjusted earnings before the EBITDA stuff, well, it came in at $62.7 million. That was basically in line with estimates, but they're down 15% in pre-market because of fourth quarter revenue missing it big here for StubHub out there. So that trial isn't really giving a bip here to StubHub at all. We'll have to see where that continues on. Let's go retail here. American Eagle, that clothing retailer. Let's look at their stock. Here in pre-market, as the market's just opening, well, pre-market, they're down about 3% right now. You see, if you see it watching us right now, big upswing in pre-market there, and then just downhill after that as well. Down about 3% here as the market's ringing open. American Eagle did beat their fourth quarter earnings and revenue expectations. Their growth there was the Ari brand is where their growth was coming from. So big blip in pre-market and then just sell-off city there. So pre-market down 3% for American Eagle Outfielders. And then we got Burlington Stores. Yeah, they're up 7% in pre-market here today. They delivered an earnings and revenue beat in its fourth quarter report that came out this morning. Guidance for both the current quarter and the full year, well, they were in line with the expectation levels, according to the investment people. Company said in a press release it believes there is upside for its projections moving forward here in 2026. So that is why they are up here in pre-market 7% as the market has officially rung live. We do look, it's going to be down today, so maybe we won't look at it again here at the end of the show. Everything is down huge, as I see here. Russell 2K actually is on the positive side, but everything else upon opening. Dow's down 262 on open. S&P 500 is down 15. Nasdaq's down 41. Russell 2K is actually up 27 points right now, according to the market updates that I am seeing right now as they are live out there. And I told you earlier, we talked a lot about power consumption and how we get power here today. Well, here locally, how does this affect us? Well, there's a proposal from SRP management out there, and they say that they want to see customers to see a 3% decrease on power bills. They want to see that coming up through May through October, just this year in 2026. What does that mean, 3%? Well, it means the average residential customer is going to save about $5.57 per month in that time frame. Of course, May through October, our most expensive electric bills here with the heat that we do experience. The price decrease would be offset by a projected surplus in SRP's total fuel budget, is where they're seeing that savings come from. SRP specifically put out a statement and said SRP management is projecting the fuel and purchase power adjustment mechanism balance will have a surplus of $56 million at the end of April 2026 due to higher than projected retail sales and lower than forecast natural gas and market power costs. The management's proposed temporary adjustment here, this decrease of 3%, they say it will reduce customer bills and help align summer prices with the lower costs SRP expects to incur out there. SRP has offered similar summer discounts in previous years. It's all response to those decreasing fuel costs that they get. They just pass it along to us consumers as well. It's interesting that they're going to do a 3% decrease. Now, it has to be voted on, but it'll probably pass. But the 3% decrease just comes after SRP increased rates by 3.5%. What was that last October as well? So why even put the increase in if you're just going to take it away for the May through October? The games these electric companies play out there, right? This will be voted on, by the way, March 26th by the board of directors of SRP coming up here as well. And then we talk a lot about how wineries are struggling right now. Alcohol companies in general are struggling right now. But if you're a local person and you like to support Arizona wineries out there, there's one down there in southeastern Arizona. It's called Torito Farm. It's going to receive $68,940, basically $70,000 from the U.S. Department of Agriculture. It's going to be so it's able to expand its size and even its operations down there. This is a very small business. It's located in Wilcox. Of course, it was founded, I want to say 1996 time frame there. But they do things other than wine. They offer farm grown food, a variety of spirits, and it's microbrewery. They have a coffee bar. It's called Beehive Cafe, which I do love that name for Wilcox. It has overnight suites and glamping domes you can stay in as well. This investment is being made possible by the USDA Rural Development Value Added Producer Grant Program we've told you about here before. You can apply now through, I think it's April 26th, but it's coming up in April. You can apply now through that program through April if you're a small business out there. That program exists to help for profit agriculture businesses generate new products, create and expand marketing opportunities, even increase producer income as well. That's what that does. But local winery, look, if you want to support local, that's one that I would recommend you look at as well. There's a lot of good wineries here in Arizona as well. And then Grand Canyon University making some waves as we're talking a lot about these chips and Taiwan semiconductor manufacturing up there in North Phoenix. Grand Canyon University is officially and has been partnering with the Taiwan Semiconductor Manufacturing Company for an industry funded 11-week course, which after that course, you can end up with a job offer from TSMC Arizona. So the program began last summer and has 51 students, 35 of whom are now working at TSMC after completing the 11-week program. It's funded by a combination of the Federal CHIPS Act, local state agencies, and even industry partners. That's allowing students to take the course tuition free on top of it. So, GCU Executive Director for Semiconductor Workforce Development, his name's Dewey Thomas, if you need to know. He said the program isn't just for college students either. Anyone with a high school diploma, even a GED, and also a green card or U.S. citizenship can actually apply for this program. He went on to explain that enrollees learn how to move semiconductor wafers through the process that's needed to get them ready for their distribution. And as we all know, TSMC has invested $165 billion in its microchip fabrication campus in North Phoenix. And the interesting thing is, right, you look it up and go, how big is this company? Have they filled out all these positions? No, they have not. The TSMC, Taiwan Semiconductor, currently, right now, more than 100 job openings in Arizona on its job board on its site as well. So they need people, GCU trying to get people up there. And those are obviously in demand jobs right now. And they need people to get up there and do it. So, an option for you if you looking for something different that interests you, go through GCU an 11-week program, and you're all set up as well. And finally, your Chick Fil A. I'm not a big Chick Fil A fries person, so I wouldn't notice a taste difference. I don't eat them very often, but a lot of people have been complaining or saying that the fries taste different. Some people complaining, some people not. Well, the reason why they're not including pea starch. Yeah, that's no longer a list of an ingredient there on their list of ingredients. According to Chick fil A's website themselves, Chick fil A quietly took away pea starch from their deal. Of course, there was an uproar when Chick fil A went away from the original recipe and added pea starch. Pea starch makes the fries more crispy and last longer in that crispy state. So nobody knows when the ingredient was, taken away from the fries. It was quietly done, but it has been rolled out nationwide officially now. Chick Fil A did decline to provide any additional information to USA Today when they reached out yesterday to ask for this when this change happened. But the Food Allergy Research and Education, that aim of the company, right? They're a nonprofit, I should say, that aims to improve the quality of life and health of those with food allergies. They put out back in February, and they announced that pea starch had been removed from the Chick fil A fries, and guests with pea allergies can now enjoy waffle potato fries. So we know that it was removed as far back as February 12th, but a lot of people on social media have been saying the fries taste different again. I don't know if you can notice that, but that's why. No more pea starch in your fries, folks. Plug your own joke in there. Hey, I appreciate you joining us here for this Thursday edition of McCollum on Business. We'll be back tomorrow morning on Friday. Get you ready for the weekend as a busy weekend here in Phoenix with IndyCar and NASCAR here in town. It's going to be busy around the business world as well with this Iran U.S. battle going on. And what does that mean for stock markets and things? We'll get you updated on that. I'll just tell you right now, everything's still down and getting worse here as this gone on here. The market's been open for about 14 minutes now, and everything is down even farther there, folks. So buckle up as we deal with this. Oil prices also up here today and then also going up. So we are dealing with a gas problem coming up, which is going to affect all of the staples out there, food delivery, etc., with gas prices shooting up. So come and join us here. We'll keep you updated in the business world. For now, McCollum on Business is done. The main event coming up next. We'll see you then, everybody. Don't forget Pit Stop later on in the day as well. Thanks a lot, everyone.